Let's pick on that with Dr. Stephen Nash now from FIG Securities in Sydney. Morning to you, Dr. Nash. Always a pleasure to talk. We look now into a rate decision tonight by the ECB. What's it going to do to those peripherals, another rate rise? Because if the bark is as bad as the bite, or the bite's as bad as the bark as it has been, that could be problematic.
Yeah, I think the problem for the peripherals is tighter monetary policy is going to really impact growth expectations again. But I think the market will be focusing on what the statement is from the ECB, and particularly what the outlook or rhetoric is with regard to another rate hike. I imagine that given recent data and the impacts of austerity measures starting to impact growth perceptions, that they may back off rhetoric of a further rate hike. So that might be a positive for markets.
Do you think a lot of it's been not so much the peripherals and their mindset, the ECB authorities, but also now the big fish, Germany, France, things looking a bit unsteady inside those economies?
Yeah, the effects of austerity have to affect perceptions of growth, and I think they're starting to do that. So I think that may delay the rate hike tonight, but I'd say odds on that they will go, and that they will change the statement to be much more evenly balanced going forward.
What's to you, mate, when you sort of look inside what the ratings agencies have been very busy doing of late, particularly the idea of French banks, their commitment to rolling over debt? For investors in that respect, if that's seen as no different to a default, what strategy should be adopted now in holding of, in terms of selective holding of debt?
Look, I think the rating agencies have become, like everyone else, more conservative. The average consumer is more conservative. Rating agencies have become that way as well, and that's leading the agencies to be aggressive in terms of rating downgrades. The Portuguese example with Moody's is just one of those examples. We've seen a whole series of these of late. I imagine that with regard to the French banks, they're trying to basically come to the party and assist with the rollover. I think that's a positive move. I think other European banks will probably and countries will join that, and I think the ECB has also indicated that selective default will be accommodated within their framework for the time being.
In a sense, and just draw parallels with the way you see the US debt ceiling and their fight to clear their debt overhang and potentially get a downgrade off the back of that, you're saying the rating itself is not really where we should be focusing on?
Well, we've come through a very difficult time. Is it really? The question is it realistic to expect that an economy like the US should maintain its AAA rating given the size of this crisis we've been through? If the US was to be downgraded, would it really affect the Treasury market? Initially, I imagine it would, but really the US Treasury market will remain the central bond market, and I really think that focusing too closely on a AAA rating is probably not the right way to go. As an investor, I'd prefer the economy to be moving forward, momentum to be going with a lower rating than having no momentum and having a AAA rating.
It's clear, though, is it not, and you flagged this fact that you got hundreds of world-renowned economists writing to Congress saying, don't give up on spending. Now, that's another way of saying, don't take the trainer wheels away from the cyclist.
I think that the point is that the economists are saying that at this pivotal moment, as they describe it, that spending cuts should be moderated. Now, I think the Democrats are trying to do that with regard to the proposals at the moment. They're trying to moderate the spending cuts with tax increases, whereas the Republicans are just not giving into that at all. So I think the Democrats are trying to paint the Republicans as extremists, and I think we're going to go down to the wire on these negotiations. It's a real shame that this should be happening. We've got large auctions tonight in the US. These negotiations are effectively increasing the cost of US borrowing right now. It's not that they will, they are already.
So what happens? It goes down to the wire. Who wins?
I imagine that if there is a default, that the Democrats, I imagine, will probably get in a better position because they're painting the Republicans will be seen as extremists and the Democrats will move more to the centre or be perceived to be that way. I mean, we're already in an election campaign, as you saw last night with Obama's various media coverages.
You could argue extreme times call for extreme measures, so whether painting Republicans as just that will pass muster, will sway things, is going to be seen soon. As you say, it's a critical night in any event, so a resolution would be, I guess, well overdue at this point. Thank you so much.
Yeah, thanks.
Dr. Stephen Nash from Fig Securities there.